So we are now in the middle of spring, May 2021. What's going on with the housing market in our area? There's no homes. And that's what we're seeing a lot these days, across the country, especially locally. We are seeing a lack of inventory out there. What are some of the big drivers for that? Nationally, you'll hear that a lot of homes haven't been built. In our area, there's not a lot of homes to be built. As you go farther outside of the metropolitan area, you go to Connecticut, you go upstate, there's land to be built. But in metro, New York City area, Westchester, the Bronx, there's not a huge amount of homes to be built. So what do we do about that? We've seen more and more demand come in with those low interest rates. Google reported last week that the search question was, when is the housing market going to crash? Spiked almost 2,500% in the past month. What does that mean? Are we going to see a bubble again? I don't think we're going to see a bubble bursting, but I think we will see some prices decline once interest rates go up. Our market has been fueled here, I think, by excess out of New York City and also low interest rates. When rates went from 4.25 down to 2.75, that created a huge amount of borrowing power. You're able to borrow over $100,000 more for the same monthly payment. What has happened now? A lot of municipalities have increased their tax rate. So the taxes that were $15,000 on a home before, that was assessed at $600,000, is now assessed at $700,000, and the taxes are now $17,000. So you're starting to see some of these things kind of come together, and you're starting to see interest rates rise a little bit, which we'll talk about in a minute. What are some of the reasons why homeowners want to sell their property this year? One, the house doesn't fit their needs. We learned during the pandemic the house was too small. They need a home office now. They just need some more space to kind of spread out a little bit. They can make a profit. The difference between '06 and today is that people are not using their homes for ATMs. People generally have more equity in their property and say, okay, if I'm going to be retiring in a few years or I wanted to make the move, the home is worth more now than it's been in a long, long time, if not the highest, let's sell now. Some people want to downsize. They're saying, okay, you know what, this was weird with having this, quarantine and everything. Let's start to kind of wind down a little bit. Let's downsize. Let's get a condo. Let's do a rental. A lot of my clients that have sold their properties, have now said, okay, I'm going to rent it for a few years and then we'll figure it out. Living closer to family and friends. That has been so important now with the pandemic that you weren't able to see people for 3-4 months, a year at a clip, depending on the situation. It's being important to be close to them. Okay, and they want different features or different things in their home that they didn't think of before. So let's tie in a little bit of what we're seeing with the forbearance. We're seeing some foreclosures come back. From what I'm being told, they're being spread out and they're only foreclosing on confirmed vacant properties. So the moratoriums on evictions, the overall moratoriums still kind of fall into place a little bit, but they are loosening up a little bit. What does that mean? We're seeing a little bit more inventory come on the market now. Okay, and we're going to talk about that bubble again in a minute. The Wall Street Journal said that customers are more upbeat now than what they've been in a long time. 9% of Americans plan to buy a home within the next year. I think that's really true, and especially with the interest rates being where they are. And as they creep up, we're still going to see kind of a lot more people kind of come into the market, and we don't expect to see a huge amount of demand, at least on the short term. We talked about mortgage rates. They were down probably about 2.65, 2.75 in the area. They spiked up to a little bit over 3, maybe 3.25, and they're averaging out nationally just about 3% now. Still a really good interest rate. And you're always going to see that fluctuation. I believe rates kind of fluctuate twice a day. I don't think we're seeing anything major, but everybody's projecting about the end of the year to probably be at the 3.5 to say 3.75% interest rate. Maybe we hit 4 of things, but probably not until 2022. So where are prices going? The average between a lot of the forecasters are saying almost 7% appreciation from year over year from 2021 to 2022. We saw from 2019 to 2020 and then 20 to 21, we saw an 11% growth in Westchester and the Bronx counties on average. What does that mean? That means that we're seeing almost 20% growth in a matter of 2 years. Kind of plays a little bit into that bubble kind of formula of where we're going. But if we're seeing a 7% growth rather than a 12% growth, that means things are easing a little bit, which means that creates more of a healthy market. That when rates do go up, the market doesn't burst. It's not a crash, and that's what we're really hoping for. Seeing the amount of properties increase, builders are building now even with the rising cost of lumber, copper, materials, labor, everything is going up. We are seeing builders put more product out there nationally, but a lot of people are actually saying we're not going to list this property until it's done because we got to see what it actually cost us. And I'm seeing that time and time again, both locally and nationally on big home builders. So we are looking to see kind of an increase in overall home sales from this year to next year and continue to grow over the course of time. And all of the mortgage-backed associations, Freddie Mac and Fannie Mae are expecting that as well. So where are we seeing today? It's still low inventory. Interest rates are still low. Properties are still moving. Buyers are being a little bit pickier. We've seen a little bit of a slowdown in what they're willing to just kind of jump in, dive in, do. And we're seeing a little bit of sometimes when people do that, they do get a little remorse, which is good. That means that we're seeing some stabilization, that the buyers that we're getting out there are solid. They are putting more money down on properties, and they're getting to a closing table quick enough. Some of the banks are a little backed up with appraisals. Now that we're in the spring market, things are busy, but a lot of the refi boom has come out. So we're seeing kind of stabilization, seeing that back to that 60 to 90 days, sometimes 30 days to close once we're in contract. So all in all signs point to a good spring market. We're seeing good things coming to the summer months. Long term, I think we're going to be okay. So if you have any questions, you need anything, feel free to reach out and we'll check in.